Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today, following the sort of slight market jitters that we've seen in crypto, in tech, in US indices, in some European indices and in some commodities, I was wondering what your stockbroker is going to come up with to drum up interest in you and make you buy some more stuff. And I just thought, you know what, I think it's time for emerging markets. They haven't pushed on those for a while, on that piece of string. So that's what I'm going to do today. So my first chart is the South Korean Kospi index. Now, I would agree with you if you think like I do that South Korea is not exactly an emerging market. I think it's emerged quite some time ago. I mean, particularly in the light of the recent announcement where the Samsung heirs have agreed to pay inheritance tax of $11 billion plus donate 23,000 fine art artifacts, the inheritance settlement. I mean, this is not emerging market at all, is it? Anyway, here you see the Kospi index of the top 11 shares in Seoul. And you can see that we're not really going anywhere, haven't gone really anywhere since January. We're just hugging the 50-day moving average. It's overbought as it has been all year. Both volatility and bullish momentum have really dropped since February. And we've seen record volumes, which is what's plotted below there. You can see very much higher, 2 to 3 times the pre-2020 volumes that we'd got used to. Honestly, I think this is looking rather tired, and so therefore is not a strong bullish contender at all. My second chart is again a weekly chart, and it's the Taiwan main index, the TAIEX, Taiwan weighted index. And again, like the Kospi, since 2020, the volumes have seriously increased, as has volatility. It's so much higher than it was 2 years ago. And that makes me think, what is chicken and what is egg? Does volatility attract volume? I've got a feeling it's that. And you can see the sudden drop last week below the 9-week moving average. We're clinging to the 26-week moving average. We're still way above trendline support since 2015. I've got a feeling we've got another sort of drop to go, either to the cloud or to that trend line, which would take us back to the sort of lower levels that we saw at the beginning of 2020. My third and final chart is that of the Jakarta composite. Now, this I would class as truly emerging. And as you can see on this weekly chart, we peaked at the beginning of this year, and it was perfectly on what had been trendline support since the 2008 low. It's become resistance. It also, at the 6,500 level, it failed in the first quarter of 2019. Again, it's far more volatile since the first quarter of 2020. And again, the volume is record. So we've got all this little trio have got really good volume and higher volatility. We're testing this year's low at 5,735. We're below the moving averages, which look set to turn bearish. I've got a feeling this one too is going to drop to the cloud, which is roughly in the middle of the March 2020 low and this year's high, which would take you back to a sort of equilibrium level, I would say. And then we'll see. Then we'll see how we go, because the cloud isn't all that great this week and next week. But instead of your stockbroker suggesting where and what you should buy, I mean, I would suggest, well, why not just go short? I mean, sell short. It's so easily done. So I'll leave you with that thought, and I'll try and come back with some more interesting charts for you next week. Until then, good luck.